All right, guys, welcome back. We're going to go over our entry approach. Now, there's two ways that we approach the market, and I'm going to show you right about now. So the first way you guys already got introduced to, which is a direct. So direct, and then the other one will be confirmation. I believe that's how you spell it, but it doesn't matter. Anyways, right? Direct and confirmation. So the direct would be when you have a point of interest, okay? And let's say we have all right, a strong low right here. And there's a POI right here. Let's say this is a order block, for example. Let's just say it's an order block. All right, so order block, okay? That's the OB. So the direct entry will be, just a color, will be us refining the higher time frame order block, right? And the way we do that, like I mentioned on the last video, I believe, is we line this up with lower time frame order block. So let's go into some detail on that. Higher time frame OB, that key level. All right, that's the key level. So once we break this down to a lower time frame, this is a higher time frame, right? When we break this down, in that key level, we're gonna see multiple candles. So let's say we see some bullish candles here. All right, we're gonna see some multiple candles, right? In that price level, in this key level right there. Okay, so the one, just color, right? The one candle that we're gonna choose is gonna be the one that's lining up with the higher time frame key level. So in this case, it will be this one right here, right there. It's lining up with the higher time frame key level with the open of the order block, for example. Our stop loss is going to be just above, right? That is where our stop loss is going to be, right? So that's our SL. So write that down. Our stop loss is going to be above the lower time frame POI. All right. Now, when you drop down time frames, obviously there's going to be a structure point. So this right here could just be a structure point like this because it is the lower time frame, right? So your stop loss, regardless, will go on that POI, which would most likely be on a structure point high on the lower time frame. Still with me? So your stop loss would just go just above. Is a structure point high? There's a lower time frame POI. Perfect. That's the one that we're going to choose, the one that lines up with that key level. That's where your stop loss is going to be. That's the stop loss placement for the direct approach. That's how we're going to approach a higher time frame order block. And that's how we're going to refine it. And that's how we're going to take it. This is probably something new to you, but trust me, this works if it's done right. It works phenomenal if it's done right. Now, of course, let's get into some cons, into the negative side of this, because they both have pros and cons. The negative side of this is that one, might miss you, might miss the trade. Two, it might hit stop loss. If you're not watching how price is approaching, if you're not watching price approach this with liquidity being fed into it, my stop loss. Maybe you forgot about it being a weak point and it just hit. So for example, this was supposed to take out the high, but if it fails, it became weak. So let's say you entered right here, right there, right? Fails to take out that high, fails, that becomes weak, comes down one more time, so it takes you out either SL or break even, then it goes, right? So that's a con. That can happen. That's the reality of trading and the reality of the strategy. I'm not trying to sell you a dream. I'm being transparent, honest with everything that's going on here. Okay, you have to know both sides. It's very important, right? And then, of course, number 3 is it just completely validates. Now, like I mentioned, it's not going to be a strategy that's wrong, all right? Because if you backtest this enough, it is highly accurate. The win rate is high, the hit rate is high, right? But that will come with experience, and that's obvious. We can both agree with experience, you get better at this. You will get better at seeing these setups, you get better at entering these setups, you'll get better at seeing the strong highs, strong lows, the liquidity with time, with experience. So when you first are getting started, all right, guys, you might experience a very low hit rate with this, right? You might. It depends. It depends your background. It depends what you know. It depends where you're coming from. Everybody's different. Some people might understand this in the first week, the first month. Who knows? But I'm being honest here. I'm letting you know, right? So yeah, right. Of course, this is what I consider not such a high probable way of entering a trade, right? So I call this medium. So median, right? And yeah, that's pretty much the cons, right? The cons is might get missed sometimes. Might just maybe you put at the open, it missed the open, it hit the wick. Maybe it's the wrong POI. Again, it comes down to only one thing: human error. All right. When you have a system in place and it works because you back tested it, it's rinse and repeat. But us as humans, we can't, like, we just can't remember everything at once. It takes time, right? Like we want to hit mastery so fast, but we're humans, we're not a robot. So we make the error because let's say that you saw this, that you saw this at POI and you entered direct, right? And then it took you out. But then I entered right here because I saw this. So I took a win and you took an L. Does it mean the strategy doesn't work? No, it just means that you just saw it wrong. You were not aware of this. You forgot about something, or you didn't remember something, or you didn't see something. That's human error. It's not the strategy, it's not the system. I know it works. If you backtest this stuff over and over again, you will see it works. Amazing. All right. Anyways, enough of that rant. So that's that, right? That's the way that we approach any PY, rejection blocks, unnegative wick, imbalanced fill price action. That's the way that we're going to approach it. Just like that. Confirmation entries. A lot of you heard about these. There's different ways, right? So this approach number 2. So this would be pretty much approach 1 and approach 2. So confirmation entries would be POI. Maybe when price is coming down, liquidity, let's say, right? It's coming down. When price comes down in here, then we wait for a lower time frame to give us the same thing. A what? A Quasimodo. The same pattern. The same pattern. Let me just change this color. We enter right here. Go long. It's the same thing that's happening here. We're looking for that in there. It's the same pattern, but on the smaller time frame. Okay. That's a confirmation entry. So what are we looking for? Simply a QM. That's it. A QM, right? If you're looking for longs, you're looking for a QM. That's it. If you're looking for shorts, you're looking for a what? A QM. That's it. That's it, right? From here to here, that's all we're looking for is a QM. All right. Later in the course, you're going to look at the models that we have. So that's the type of QMs that we have, right? We have two specific models of QMs, but right now we're just talking about the approach to these point of interests, the approach to, to the market. So this is approach one, approach two, how we're going to approach it POI, right? Direct, how I just mentioned, just like that, there's nothing else you got to do. Then confirmation is when you wait for a QM to form when it comes in here. The market is fractal, guys. All right, like I mentioned before. So what is the con of the confirmation? So let me just delete this. All right, number one, also missed entries, meaning that you might not get a confirmation and you'll just come and just go. And that's okay, it happens, that's just part of the game and you have to accept that. All right, we're not gonna catch every single move, no one can catch every single move. And at the end of the day, guys, it's not about catching every single move, it's about catching high probability trades. All right, favorite quote is less is more because less is more. All right. For those that don't know, I only trade 1 to 2 times a week. So I look for high probable, obvious trades that just are in front of my face and I take them. And I make enough percentage for the whole month, right? So high probability trades, and that's something I'm gonna preach throughout the course is high probable scenarios, high probability trades. It will make up for all of those small trades that you want to take 1 to 2, 1 to 3. If you get one trade for 1 to 10, 1 to 20, 1 to 15, I said, it will make up for everything. You just need 1 to 2 trades a week, in my opinion, to make a good living. Again, that's my opinion, right? Everybody's different. So miss trades, and that's okay, it happens, right? And even you go to the seconds time frame, it's still time the seconds time frame, and I give you nothing, and there's nothing you can do. And because it's out of your control, you're not going to be worrying about it. Just let it go. All right, just let it go. Remember, human error. All right, that's the only thing that will hold us back is ourselves, not the strategy, not the market, it's us, right? And then con number 2 will pretty much be this, which is something that you're going to come across maybe a lot when you're first getting started trading this way, is that, for example, you might see a Quasimodo forming here, right? Let's say, okay, let's say it's forming on the 1 minute, right? The 1 minute. There's a Quasimodo forming in the 1 minute, and it does this, but you completely forgot about, let's say, the 5 minute, for example, the 5 minute range, the 5 minute structure point, right? You forgot about that. So this supposed break, which was a break, it was, remember, that was just a break to complete the 5 minute, right? And then you're looking for a long right here. Then it takes you out. And then it creates the Quasimodo. Then it goes, right? So this is gonna happen a lot, right? For everyone just getting started. And that's okay. I'm gonna let you know right now, it is okay because you are not used to seeing the market this way. And I know not a lot of people teach this way the way I'm teaching. It's very rare. Only a handful of people teach this way. So it's new. So of course, when something is new, keep in mind you're starting from zero again. It's a new strategy. So from scratch, you're going back to the whiteboard. All right. So this might happen. And that's just another con that I'm gonna throw in there, which be, we can say structure mix up. So mix up. Let's just say that, right? And besides that, I don't see no other con because this would pretty much be what I call a high probable scenario. It's a high probable trade because you're waiting for it to give you something, right? How do I know if this PR is gonna hold? Well, if you want to be 100, let's say 100%, let's say, right? Then this is probably your best bet. Wait for confirmation, right? 9 out of 10, it'll go. And this is backed by back testing data. All right. Of course, I don't want to say 100, but for those that get to the point of understanding this, you will see what I mean by 100, because it could get to the point where this is highly accurate if you start to understand this stuff. Very good. Again, that would depend on experience for everybody out there, you know, that is brand new to this stuff. So that's direct, that's confirmation, right? They both work. Wonderful, right? And eventually, with your own backtest, you're going to find which approach you want to take, right? Direct entry, there is no models. This is its model itself. This is the only way. It's the higher time frame POI, draw out the key level, and whatever it lines up with, that's going to be your POI on the lower time frame. And stop loss above the lower time frame POI, that's your entry, right? So to get to the level of catching these, it would take a lot of back testing, right? This one has two models, which is what we're going to cover throughout the course. So eventually you're going to find which approach you enjoy more and which one that you like. Is it approach 1 or approach 2? But they work, in my opinion, flawlessly if they are obviously applied correctly. And that's the reason that you're here learning from me, to help you apply them the right way. All right, just follow the rules, don't break them. Okay, don't add nothing to it. Just don't add anything extra to what I'm currently teaching throughout this course. Follow them the same way I'm telling you, and things should work out fine. All right. And again, disclaimer, experience would play a big role. It definitely will. All right. This is, it's not easy, but once you understand this throughout the weeks and months to come, I said months, it's an amazing system. Okay. But that's it. Enough of my rant here. Direct, confirmation. These are two approaches that we have. All right, guys. So like always, feel free to send me any questions you may have. Other than that, on to the next.